All right. What we're going to do now is go over how to complete the assignment evaluation of a stock. So make sure you have this Google Doc opened up, and we're going to go through it. I'm going to demo how to do it. You're going to have to do it with a stock of your choice. How you're going to find out about a stock is you're going to go here to the Yahoo Finance website. So let's go ahead and get that opened up. Now, there's a lot of places that you can find this information on stocks. I like using the Yahoo Finance because I'm familiar with where you can go to find the various information. What you're going to have to do is go find the company that you want to research. And you can simply do that up here in the Yahoo Finance to search for names, symbols, new symbols, or companies, and put in the company that you want to find. So I'm going to choose, and you're not allowed to use this for your assignment, I'm going to do Harley Davidson. Okay, so I'm going to type in Harley Davidson, and there it is right there. It has a stock symbol of HOG, hog, because again, Harleys are big motorcycles referred to as hogs. Okay, it shows that it's an equity, in other words, a stock, and it's being sold on the New York Stock Exchange. Okay, so I'm going to go ahead and click on that one. And what it's going to do is bring up a stock quote on Harley Davidson. And there it is. Now, what you got to keep in mind is there may be some issues with trying to find a company or what you think is a company in order to find a stock quote. And I recommend just picking something that might be interesting to you or something you like. Maybe it's a style of clothes you wear. Maybe you like Nike. Look up Nike. Maybe you got an iPhone. Look up Apple. Okay, so pick those kind of companies. Maybe you look up. Maybe you like certain kind of food. Maybe you like McDonald's. You just go with McDonald's. Some issues you might run into. Number one, maybe the company you're trying to find isn't publicly traded. There's a variety of reasons that a company may not actually sell stock. It may not be sold in the U.S. and it's only available on a foreign market. I don't recommend going to one of those because it's going to get too confusing when you're doing this. Or what you think is a company might actually be a brand name that is owned by whatever the parent company is. I'll give you an example. Let's say that you like Taco Bell. You can't buy stock in Taco Bell. The main reason is Taco Bell is not a company. Taco Bell is the brand name of a franchise, which is a type of business arrangement that is owned by a company called Yum Brands. So if you like Taco Bell and you'd like to buy stock in the company that owns Taco Bell, you'd actually have to buy stock in Yum Brands. So instead of trying to find Taco Bell, which you won't find, okay, what you could do then, and you can usually just like go to their company's, like that brand's website, and usually at the bottom it'll tell you who owns that company. You can find like this is owned by Yum Brands. So I know that, so maybe I do Yum Brands, and there's Yum Brands, and that's the company that I actually want to look for. Okay, and there's a stock quote there. Let me go back to the Harley Davidson one. Okay, oops, where do we go here? Oops, it's just moving slow. There we go. There's my Harley Davidson quote. Okay. Oops, and it just went away again. Let me try going back to it. I'll keep skipping around on the Harley Davidson. H-O-G. Come on, here we go. Get this quote back up. Okay, there's my quote. So right now, this tells me it's selling for $40.78. Don't really need to mess with that because the first thing we need to do here on the assignment is what's company to choose. I would write Harley Davidson, and I would put their stock symbol. Okay. Then it's asking what's the latest close price. Well, all this stuff we actually need to find under historical data. Okay. We will go here to the site itself, and let me close this out real quick. That's in the way. We need to go right here to this link. Let me scroll up so you can see it a little bit better, to historical data. Okay, what this does is actually pulls up the closing price for this stock for whatever time period we set. Get this going. There we go. Okay, so it's showing historical prices over the last year. It's showing it every day. Okay, that's a little bit too much to look at. So what we want to do is sort this instead by daily. We want to look at, let's get here, come on, let's get this page loaded. The frequency, we want it to be monthly. Okay, because we're going to be looking at it what the stock has done over the last year, the last 2 years. We're trying to evaluate how this stock would have performed if we would have bought it a year ago or 2 years ago. Would we have made money? Would we have lost money? If so, by how much? So we've sorted it now monthly. So I need to come here and apply, because I selected the frequency of monthly. And what it's going to do is get rid of all these daily quotes. And now what we'll see is monthly quotes over the last year. Okay, so the next thing I'm asking for, what's the latest close price? It's shown here. And we see its close prices here. Don't do the adjusted close, because it incorporates some things that we don't want to have to incorporate, because we're trying to run the numbers ourselves. Okay, so we've got the close price here. It's $40.78. So I will put that in here. Remember, you are doing this for your own stock. Then what I want to do is scroll down and see what that close price was roughly a year ago. And it was $50.88. So I put that in here. You can already see, probably not doing so well with this, because it's basically lost $10 a share over the last year. The next thing I'm asking is, were there any dividends paid to the shareholder? Not all stocks paid dividends. This one happens to have paid them. And you see them listed right here. It shows the date that the dividend was paid and the amount that the dividend was. In this case, 37 cents. So I need to put in here September 17th. So I go 9/17/18. And it was, and it was $0.37. When was the other one? See, there was one on May 30th for 37 cents. So then I would say 5/30/18, and it was 0.37 cents. When was the next one? Looks like it was back on February 13th. Okay, so that's 2/13/18, and it was also 0.37 cents. And then lastly, it went paid about a year ago, December 14th, and it was 36.5 cents per share. So let me put that in there. What was the date again on that? 15th? 14th. So I got 12/14/18, and it paid 0.365. So if I add those up, you get my calculator out here. I got one pulled up. We got to go 0.37 plus 0.37. Oops. Get this going here. Is that working? 0.37 plus 0.37 plus 0.37 plus 0.365 equals, it made $1.47.5. So this is $1.475. Then asked it to do a split. You'd easily be able to tell if it did a split, because it would actually tell you somewhere along here, 2-for-1 split, 3-for-1 split, 4-for-1 split. Since we don't see any splits, this obviously did not split. So I would just say none. Now what I need to do is calculate what the return was over the last year. And it's very simply whatever it's currently selling for plus the total dividends minus the last year's price. Then you take that number, divide it by the last year's price, because you're trying to calculate a rate of change. That's going to give you a decimal. If you multiply it by 100, it's going to tell you what that is in percent. Okay, so let's go ahead and do that. So it is selling for current price, 40.78. Let's go here to the calculator. Let's clear it. We can go 40.78 plus, what was the dividend? 1.475. Oops, wrong thing. Plus the 1.475 equals that. But now we need to subtract last year's price, which was 50.88. We got to go minus 50.88 equals. So it lost $8.62 over the last year. Once you include the actual money you make off the dividends, we now need to divide that by that same $50.88 because we're trying to calculate a rate of change based on that. 50.88 gives me a number. I need to multiply that by 100. And this tells me that I lost 16.95% on that stock if I would have bought it a year ago and sold it now. Or would I be making right now? Okay. What was that number again? 16.95%. So it's a negative 16.95%. Not a very good stock right now. It's lost basically a sixth of its value in the last year. But let's compare it and see how it's done over the last 2 years. Because it might not have done so well this year, but maybe it was doing better 2 years ago, and we could have made up for it by how we would have done over that 2 year to 1 year. So what we need to do is go find the stock's close price from 2 years ago. And we do that just by simply coming here and then here, changing this over and just taking off 1 year from here. So let's go to 11/12/2016. And then we go ahead and apply this filter. And now we got to go down all the way to the bottom of this, and we see that 2 years ago it was selling for $58.34. So now I'll put 58.34 here. That's $58.34. Right? Look at the dividends over the 1 year to 2 year mark. Well, it looks like it was, see, we already had up through here done, remember, because we were here in November. So our previous year-low quote was somewhere around here. So let's see, September 11th, 2017. So I did 9/11/17, and that was 0.365. There was another one on May 23rd of 36.5 cents. So 5/23/8 or 17. And that was for 0.365. Then we had a third one on February 13th, 2017. Of that same 36.5 cents, 0.365. And then lastly, the one from December 2 years ago, only 35 cents. So their dividends have gotten better, but their stock price has not. So this would be 12, what was the date again? 1/12/17, and that was for 35 cents. So we got to add that up. Go to our calculator. All right, go here, clear that out. So we got 0.365 plus, oops, what's going on here? There we go. 0.365 plus 0.365 plus 0.35 equals $1.44. So it made $1.44 over that 2 year to 1 year mark. So we got to add those two together, $1.44 plus $1.47, or 1 point. So we got to do that plus 1.475, which was the return we had over the last year. It made $2.92. So we got $2.92. That's what it made in dividends over the last 2 years. And we got to do a split. We see there still wasn't any splits that were listed. So then we can come back here. And so we say no. And then we use that same calculation here. Current price plus dividends minus the 2 year price now, divided by the 2 year price, and see whether or not that stock performed better over 2 years. We're going to figure out by dividing it by 2 to see what the average was over the 2 years. So let's go ahead and get these numbers. It's currently selling for $40.78. So we got to come here. We go 40.78 plus the $2.92 that we just calculate in dividends. There's that. But then we have to subtract away what it was selling for 2 years ago, $58.34 minus 58.34 equals, and we got to divide that all by 58.34. In other words, this thing lost 25% of its value over the last 2 years. What was the exact number? 25.1. We'll always round to the nearest tenth or 100th. Well, this was to 100th, but it rounds up to 10, so we lost 20 or negative 25.1% of its value. Of course, we take that and divide that by 2, divided by 2, and it lost about 12.54% on average per year. So we compare how it's done over 2 years. Well, it's lost a smaller percent on average over the last 2 years than it did over last year. So I guess the question here is, did it have a higher, lower, identical rate of return short term? It actually had a lower return in the short term over the last year, so you just take that and highlight that. Oops, whatever color you want, yellow, green, you name it. And it says, okay, looking at your stock over a long time frame would have been a good investment. No, it has lost a lot of money. So this would not have been a good investment if you had to sell this stock today. But again, if you're willing to ride the roller coaster and you think Harley-Davidson is a good company, then maybe what your hope is that, okay, so this is no, it was not a good investment. Not. It has lost a lot. Oops. A lot of value. So short-term and long-term over the last 2 years, if you have to sell this stock now, would not have been a good investment. And that's how you do this assignment. Pick your own stock and look at those same numbers using that Yahoo website.